Hi, fellow traders. I wanted to put together a short video today on how to determine some data points regarding if a stock is behaving well or not. Now, when I say some data points, there is no, holy grail indicator or a black and white flag. It's a series of data that we look at as traders and to help us make our decisions. So one of the things that I found to be very helpful is up days versus down days and poor and good closes. So for example, I have my trading view and my charting system set to determine that the color of the bar is determined by the close of the prior day. So if this bar is red, that means it closed lower than the close of the prior day. That's the way I have it. Some people have different settings and I don't really understand why, but I guess everything has its use. So for example, this bar's close was here and this close is higher than the close of the previous day. So this bar is blue because I'm using the previous day. So let's just take a look at this stock, which is obviously a market winner. But again, I'm not pitching setups or anything. I'm just taking a look at stocks. Now, even if we ignore the fact that this thing has gone up considerably, let's just start counting the days, right? So here we have, we want to count back a dozen days. So I'm going to count this because I'm over the weekend. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So let's just say 12. And you can go back as far as you want, right? So then let's go back to 20, right? 13, 14, 15, 16, 17, 18, 19, 20. So this blue bar. So let's just put like a little arrow pointing to that. So now, of the 20 days, we have 1, 2, 3, 4, 5, 6, 7. 7 red days versus 13 blue days. So that is strength, right? Generally, you want to see, you want a little bit more than 50-50. You want to see 60, 70 good days versus poor days. Now, not all good days are the same, right? We want to pay attention to what is also happening in the individual bars. So obviously this is going up, and there's no mystery that this is going up. And the further I take it back, for example, if I wanted to include these days, well, that would skew, if let's say I wanted to count my days coming back from that starting point, that would obviously skew my percentage even higher because I've got 1, 2, 3, 4, 5 good days back to back, and then a small inside day, then another good day. So this stock obviously has strength. So let's look at this stock, for example. And let's take it back. So I just basically count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if I wanted to just count it from here, and let's just say 10, I'll just, put a little arrow if I'm not mistaken. That was this bar. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. So now let's look at 1, 2, 3, 4, 5, 6. So you see, that's the opposite of what I'm looking for. I'm looking for more blue days than red days. And forget about volume and forget about all of that. We're just looking for good closes versus good days versus bad days. So if you look, and as you go around, and here obviously is a stock that has gone up considerably since the beginning of October, and you see very few red days. Now you can draw the line where you want to, but if we wanted to just say, hey, what does it look like for these past days, and you can, draw a block, for example, and then just simply count how many blue days versus red days. And that's a data point. Is this something that will cause you to go ahead and buy the stock or sell the stock? No, obviously we want to make sure there is, volume contracting. If you're following Mark Minervini's system, volume contracting, it's a good setup. It's a low risk entry point. Supply is not coming to market. We want to follow the characteristics of the trend template. But just simply following this little guide will keep you out of trouble. Now, or, if you're in a stock and you want to start thinking, well, hey, maybe I've been in this for a while. Is it getting extended, or is there some weakness? You can start counting days. So now, hey, wait a second. Out of the last 20 days or 15 days, I have 70-80% red bars or down bars. You may want to take some off or get defensive or tighten up your exposure. Again, these are just data points. Another thing that I also want to understand, to people to understand, is not all days are created equally. So there is a ton of activity that happens in the market. And, when we look at some of these trades, some of these stocks just trade enormous volume. So what's actually going on here psychologically? Basically, it's sellers versus buyers, or buyers versus sellers. So we're less concerned with where the stock opens, which is this little nub right here, and more concerned with where does it close, which is there. So for example, on this particular day, which was just recently, the close was above the midpoint. So if we took that particular day and we just drew a 3.7, whatever, the midpoint is somewhere around here, for example, more or less. Now, obviously, my mouse and the bars are a little bit not precise, but more or less you get the idea. It doesn't have to be an exact science. The idea is determine where the midpoint of the day is, and then anything above the midpoint of the day, that means that there were more buyers than sellers. Anything below the midpoint of the day means more sellers than buyers. Now going back and counting these stocks, so now you can add another layer of color to these names. So if I look here and I go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so I'd say that we're looking at at the end of this, and now I say even though this stock technically is a down day, but it closed really close to the middle. I would say that I would give it the benefit of the doubt and say it's a good day, because it didn't close in the bottom range. Would have been nicer if it closed in the top. Yeah, obviously this day sellers sold more than buyers bought. And now if you want to go back and you say, okay, well, not only how many red days, but how many days did sellers? So for example, more often than not, here's a good example right here's a perfect example. And this is a blue day, right? So you say, hey, a blue day is a good day because it closed higher than the previous close. However, technically this is not a great day because it actually closed below the midpoint. So to me, it's a good day with a bad close. This is also a decent close, even though it closed below the previous price. At the end of the day, this is not a bad day. There was more. It finished at the end, and you basically only need one trade to tip it red or blue. And so these are some data points that I think have been, that are extremely helpful. Take a look at your names. Also, when you're looking to get into a name, are you seeing strength? Are you seeing a lot of more good days over bad days? And then when you want to get into what Mark calls violations, well, violations are, 3 lower lows, etc. However, I consider small violations like more down days than up days, poorer closes than good closes. Again, this is not a black and white, doomsday indicator. If something happens all of a sudden that gets me nervous, like a really big outside day or a big gap down, of course I'm selling. But sometimes I may want to say, hey, well, this is maybe not behaving as well as I'd like it to, or it's something I want to keep my eye on. There's some signs of weakness here, and get defensive, right? You don't want to be caught off guard, and and obviously learn the characteristics. Like if we look here, for example, Palantir, like it doesn't get better than that, right? Like it closed right at the top of the range. So that's as good as it gets from buyers versus sellers. And obviously, and if you count the amount of days up and down, there are so many more blue days versus red days. And a lot of those days have good closes. Interesting enough, and even if you wanted to go one step further, and but not to go crazy with what does this mean and what's the hidden message, but look how many times it's closed basically at the top of the range or very close to it. Like here is a good close, top of the range. Good close, very close to the top of the range. Good close, very close to the top of the range. Again. So that's telling you something, right? That's telling you that, institutions are buying this. That's telling you that buyers are buying more than sellers are selling. And at the end of the day, there's all this buying and selling. You want to understand what happens at the close and then rate those accordingly. I hope this was helpful. There's a lot that can be read just on a chart without looking at the fundamentals. And as technical traders, now I do look at the fundamentals for sure. I'm very interested in earnings and sales, how many funds are in there, but mainly just earnings and sales. But all of these things matter as data points, things to consider. And if a bunch of data points start stacking up, positive or negative, then you would consider maybe making some moves. Maybe you want to get heavier, maybe you want to get lighter, maybe you want to increase risk, or maybe you want to decrease risk. Well, let me know in the comments below if you found this helpful. I'm getting a lot out of this, putting out this content helps me better understand my own trading.